tonight on this webinar by Lesley Yates, who's our Director of Advocacy and Research. So we're really pleased that you could join us tonight in what is very interesting times. I did just want to start off by congratulating all of you collectively as an industry for the way that you've responded to the COVID-19 crisis so far. We're all faced with a once-in-a-century global pandemic that in just a few short weeks has changed not just the way we live our lives, but it's really sent a wrecking ball through our economy. And I'm really proud about how our industry has innovated and adapted to the new reality that we currently face. In fact, in the face of this adversity, our industry remains open for business and keeping other industries and people moving, so we as a society can provide the basic necessities in life. Without parts and supply, automotive repair and other services, people are going to suffer. People aren't going to get the transport and the critical needs that they need. So our industry is vital in keeping Australia moving during this time, and you're all playing your role in that. But you haven't just kept the business as usual approach. In fact, you've all adapted to the way you operate your businesses to mitigate risk to both your employees and your customers. And that's required innovation, and our industry has it in spades. And we've heard all sorts of reports of things that people are doing around the country, contactless parts deliveries, offering vehicle sanitisation as a service, and obviously materials to be able to undergo that service. Redesigning your reception areas to adhere to social distancing measures, offering free vehicle pickup and delivery, loaning out technicians to busier workshops. The list goes on and on. And I'm sure our industry will continue to innovate, and you'll all continue to innovate. And one of the things we do want to do as an association is share best practice on how people are tackling this and some of the good ideas that could be adopted more widely across the industry. But having said that, all this innovation and so on, and we are keeping open, but there's no doubt that every business to varying degrees in our industry is hurting financially. The unprecedented national restrictions on people movements are having a huge impact on the demand for automotive parts and service, and this is being felt right across the supply chain. And the longer this shutdown's in place, the more damage it will inflict. The good news, however, is that the state and federal governments are aware of the economic impact of these COVID-19 measures and have announced a range of support programs to assist businesses through the crisis and hopefully out the other side. And many of these programs are significant, both in their size and their reach across both our industry but all industries. And we believe they're so significant that they, in some cases, will make a difference between a business surviving or failing during these difficult times. The problem at the moment is that we're all being bombarded with information from all sources at a time when we're facing significant challenges, both in our professional and personal lives. And sometimes it's difficult to sort through all the noise and get the facts that you need to make decisions. And I must say, though, that many of these support programs are time critical, and many of them require you to apply for assistance. It's not just given automatically. So the webinar this evening is designed to give you a simple and common sense overview of some of the larger assistance programs that we believe that you may be eligible for, the support that you might expect to receive, and what you need to do to obtain this assistance. And our main speaker tonight will be Lesley, who's, I think, as many of you know, a guru on all things government, and she'll be giving you a very straightforward, simple overview of what you can get and how to access it. And I will say that while we understand that the current crisis is throwing up a whole raft of different issues that you need to manage in your business, we're not going to be covering everything tonight. The focus of this webinar is very much on government assistance programs. But that's not to say that AAAA isn't here to support you for other queries or concerns. Our team is a very talented team, multi-skilled, and their 100% commitment at the moment is doing everything that we can to help you through this crisis. And we've been putting a lot of information out through our EDMs, on our website, and through our social channels to really help you make informed decisions to help impact or lessen the impact on your business. So the main point obviously is looking out for AAAA emails, but if you also go to our website, AAAA.com.au, in the management, in the membership area, there's a whole portal around COVID-19 resources, and there's a wealth of information there for you. Also, I'll mention we did a webinar, I think it was about 2 weeks ago, with Emma from the ILG group, and that was very well received. We won't be covering off workplace relations and employee relations issues tonight, but I would encourage you, if you do have any of those queries, to contact Emma and her team at ILG. It's a free service for AAA members, and they've got a terrific team of professionals there. The number is 1300 369 703. So just to go over the format of tonight, I'll shortly hand over to Lesley, who will present an overview of the government assistance available to support your business. We'll then finish off with a Q&A session. We think around 20 to 25 minutes maximum. That will depend on the volume of the questions. But just before we do kick off, I did want to make a couple of housekeeping points. We have had a fantastic response to this webinar tonight. I think it was 220 registrations, and we've got most of those online now. But you can imagine, with that many people out there on the session, we can't have a situation where we've got your microphones turned on, because it would be very difficult to manage. So we haven't activated your microphones, but when we do get to the Q&A session, you'll see at the bottom of your screen, there's a Q&A section. If you click on that button, you can type in a question, and we'll answer it through the Q&A session of this evening. I would, however, encourage you to hold off on your questions until towards the end of Lesley's presentation, because you might end up asking a question that is covered during the presentation. I'll also say that government assistance is, in some cases, quite specific to the individual businesses. So it'll be difficult, I think, with a group this size to try and delve into eligibility issues around specific businesses. So try and keep your questions more general in nature. If you do have specific queries around your eligibility for a program, you can put the question in. We'll get back to you on the Q&A, or alternatively, just email us tomorrow at info@aaa.com.au, and one of our team will get straight back to you, talk through your query, and either provide the answer or provide a referral to where you can get the answer. I'll now hand over. That's all from me for the introduction. So I'll now hand over to Lesley to provide an overview of the primary government assistance programs that are available to you. Lesley.
Thanks, Stuart. Hello, good evening to everyone. How great to have you all online with us tonight. The intent, as we mentioned, is to give you an overview of government assistance that is available during and as a response to COVID-19. We're going to necessarily try and give you a big picture, because we want to give you a sense of the totality of what's available, how they might be divided up into categories of programs that are actually going to be useful to you, and also whether or not we're able to provide a clear pathway on how to apply for each of these programs. I see we've just lost the slideshow, so I'll just fill a bit. There we go. There we go. Beautiful, here we go. Okay, we've had a look at the range of programs that have been announced over the past month, and I'm sure you have the same sense as I do, that there just seems to be a brand new program every day. And in some instances, we've had programs announced and then re-announced with more money and greater eligibility. So you could be forgiven for saying, I can't make hide nor tail of what's going on here. So let's see if we can provide some roadmaps to what these programs are. What we've done is our view is that we can divide them easily into the programs based on their intent. So the first set of programs that you saw rolled out were economic stimulus packages. And we're going to go through a couple of those tonight. Those packages were unashamedly about just putting cash into our economy. The good thing about the stimulus packages is they have very wide eligibility, and they are also not dependent upon you proving that your business has had a downturn. The whole point of the economic stimulus packages is that they put money into people's pockets and they put money into our economy. So in public policy terms, we often call this helicopter money. And you'll know from your experience of family and friends that the government also put a lot of cash into Centrelink recipients, extra payments for pensioners, all about improving the amount of cash in the economy. We're going to go through those top two ones. We're going to touch on many of these programs that you can see here, but we're going to cover those ones that are shaded in a little bit more detail. So economic stimulus, there to put cash into the economy, wide availability, and you don't necessarily have to prove that you suffered a downturn. There is money available for investment. So if you are in a position of already looking at whether or not you were going to purchase new assets, so if you're in the fortunate position of having some cash and some plans to purchase assets and they haven't been derailed by COVID-19, then you'll be pleased to know that you're in the right position now to be able to pick up some instant asset write-offs and accelerated depreciation. We'll talk about that a little bit more. And there's also some state and federal loans to assist you to make equipment purchases if that's what you feel is part of your business planning going forward. So stimulus, investment, let's talk about the downturn. There are a pile of programs now designed specifically to talk to businesses that have suffered an economic downturn, either because they were shut down compulsory by being declared a non-essential service, or those of us who are suffering, allowed to remain open, but have suffered a downturn in demand. And the biggest program is JobKeeper, which is why we're going to focus on it tonight. But there are other programs being rolled out. State governments are also introducing activities that are based on a 30% downturn. And you would have seen in the press this week some reduction in land tax for the landlords who are reducing commercial tenancy rates to reward them for doing the right thing by their tenants. And finally, there are a pile of programs that are there for companies that are distressed. So these are the companies that have been identified by government and by the Australian Tax Office, because when I go through this, you'll see the recurring theme is the role played by the ATO as being severely distressed and in danger of bankruptcy or insolvency. And there are some programs that are specifically designed to address those companies and to stop them falling over the edge of the cliff by giving them some more time to see whether they can trade out of their difficulties. So as I mentioned, we're going to talk about stimulus and we're going to talk about the downturn programs, and I'll try and wrap it up with a bit of a case study at the end so that we pick up some of the others. And I can see from some of the questions that are coming in early, that came in during the day, that a lot of the questions are about boosting cash flow and JobKeeper. So I'm confident that we've picked this right in terms of our content. So let's start with the apprentices and trainees. I'll do this one quickly because we've done a lot of publicity about this and you would have seen a lot of information coming out on our website. So the good news is that if you have an apprentice or a trainee that was in your employment as of the 1st of March 2020, you're going to be able to apply for what is a 50% subsidy, or a better way of seeing this is $7,000 a quarter for 3 quarters, a maximum of $21,000. We're a little bit worried about the time frame initially, and where I think you might remember we were asking you to get on to registering for this subsidy really quickly, but it looks like they've put out the date for final claims till the 31st of December. So that's good news. If you're overloaded with other activities, you've got until the end of the year to make a claim for $21,000 per apprentice. Now, I've also had some questions about how you access this. So you access this by getting in contact with your apprenticeship provider. So whoever you work with for apprenticeship support, That's the entity that is processing this claim. Now, I am hearing some very mixed feedback about that. So some members are getting quick response from their apprenticeship support provider, and claims are being approved and they're waiting for those funds to flow. I am hearing from other members that some emails are not being answered. Can you get in touch with us if you are having any difficulty accessing this subsidy? Because Stuart and I will arrange to talk to the peak body responsible for this Australian apprenticeship support and see if we can't assist in getting things freed up, because this should be an easy program. It's not quite what I'd call an as of right, but it is a program that you should easily qualify for. It's very easy to prove you've got less than 20 full-time employees, and it should be easy to prove that the employee was engaged as of the 1st of March, because it's actually your apprentice supplier who did that paperwork for you. So that should be a nice, straightforward application process. And if it's not, we'd like to know about that. I'd like to talk about boosting cash flow, because this got a little confusing very quickly, because I think only a week or 2 weeks apart, the government doubled this program. So let me talk about what its principle is, and then we can move to I'll show you a diagram that gives you a better example of how this plays out. So what this program does is, it really is just putting cash directly into your account. But the way that it works it out is to calculate your withholding tax. So the tax that you report to the government, to the Australian Tax Office, this is the withholding tax that my employees need to pay as part of their PAYE tax. You report that, calculate it up. Once you've hit 50,000, that's your maximum. And that's over 6 months. I'll show you how that works in a moment. And then if you've qualified for the maximum of 50,000, you're going to qualify for the maximum of 50,000 again. So your second payment is dependent upon your first. So if under your first payment, you qualified for less than, say, 40,000, your second payment will be 40,000 and you'll get a maximum of 80,000. We've modelled this in the office, and you'll see on our website we actually did a model of a workshop of a small number, 5 or 6 employees, and we can see that you can get to 100,000 pretty quickly. Now, I know what you're all thinking when you have a program that pays between 20 and 100,000. You're probably thinking, I'm a small business, I'm going to be down the 20,000 end. It actually doesn't take very long for you to work your way up to the full 100,000. There's a couple of pieces of good news about this. One is it is an as of right program. That's great news. So it happens when you automatically put your BAS statement in. Probably a good idea to get that one in on time. So it is an as of right. As soon as you put your BAS statement in, the ATO will make that calculation. And if you are entitled to a refund, we're assured, although I'm pretty sure the ATO is going to be pretty busy, but we're assured that you're going to be able to get that refund within 14 days. And those funds should start to flow in about April, May, so or possibly May. So let me just show you what it might look like, because I think that's a better way to explain this program. So here's one that I pulled out off the net, and you can do this too. If you just type in cash flow boost calculator, you'll get a simulator. I tried 3 or 4 of them today, and I put the Australian Tax Office advice beside me and our own advice that we've received, and each of these simulators returned exactly the same result for the same case study that I ran through. And thanks to Phil Barker from RAS, I ran through a small workshop that pays $8,000 in PAYG every month. So this is a workshop that reports on a monthly basis. So in March, they reported 8,000. Now the payment is supposed to be for January, February, March. So the tax office just takes 300% of March. That's 24,000. It was 8,000 in April. It was 8,000 in May. And ignore that June for a moment. Have a look at the blue one up the top. There was 8,000 in June, and that was the full payroll tax rebate of 48,000. And then the second tranche matched that and gave them another 48,000, which is 12,000 a month until end of October. That's how we work that out. But good news is you don't have to memorize this cash flow or all of my assumptions. Just type in cash flow boost calculator, and you should be able to put in whether you pay monthly or quarterly, how much your average payments are, and it will track it out for you. Do a couple so that you're giving it some validation and you're making sure you're not just getting advice from one source. But each time I checked these, some of the big consulting firms are running them, some of the chartered accountants bodies are running them. They're a little bit easier than working your way through the Australian Tax Office fact sheets. They can be a little bit weighty to get through, but use these tools. So if you are, good news if you're in tax credit, not so good news if you're in a tax debit. They will be taking that off your debit, and you are reporting other issues. The tax office, of course, your GST that you're collecting on behalf of the government is in those activity statements. But regardless of how they net off, it is an improvement of up to 100,000 off your bottom line. And as programs go, I'd have to say that's actually one of our favourites. It's easy to understand, it's highly unusual, and it is an as of right. I do want to talk about the JobKeeper program. This is probably the one we've had the most questions about. It is confusing, and bits of it are just a little bit counterintuitive, because the government is saying to you, we're going to pay you $1,500 for workers that you may have stood down. And you're thinking, this is a pretty weird wage subsidy. You're going to pay me for staff members that don't come to work. And the answer is yes. Yes, they are. So employers can receive a fortnightly payment of $1,500 per eligible employee. I'm going to talk about what an eligible employee is in a moment. In a moment, I'll talk about who that is. And the payments happen from the 30th of March until the 27th of September. That is 13 fortnightly payments. They're going to pay on a monthly basis. So you need to have a turnover of under $1 billion. I'm guessing that's most of us on the line. And you need to be able to prove a downturn in the month of, let's say to start with, the month of March 2020 compared to the month of March 2019. Now, it's a little bit more complicated than that, because you are able, lots of us have different business arrangements, particularly concerning when you pay invoices and when you collect funds. And given this is done on a GST basis, there can be an issue of the GST that you are expecting to collect. And you are allowed to use that. You're allowed to use anticipated GST. And if you've had some unusual events, you're allowed to use April. You're also allowed to use a quarter. So the ATO is using a standard interpretation and an alternate method. They're being pretty broad about how they calculate that method. I know we're going to have companies already out there thinking, we don't have a nice like for like. We don't have March 2019 and March 2020 that are apples and apples. Or even, we didn't feel the downturn until April or May. I understand that. And the tax office is going to allow you to use alternate methods, and we'll start circulating more of that information as it comes to hand. If you don't fit one of the alternate methods, it is still possible to appeal to the tax office for the commissioner to make a discretionary ruling. And we know this is going to happen, particularly if people have taken over businesses or opened a brand new business so they don't have a trading history. And they're even prepared to start looking at pre-COVID-19 averages for the trading time that the company did have. So don't despair. This is not a yes/no. There are ways of working out whether or not there has been a downturn in revenue. It's based on GST, and there are ways of calculating that and picking the time period that suits you best. And we know the tax office is open to that, because the point of this JobKeeper allowance is that it does come out to businesses' hands. We've already raised with the government our concern about our exporters. So if you are on the line and you generate revenue from export, you will already know that that will not be accounted for in GST income. And we are starting a conversation with the federal government now about that loophole and about our concern that in this environment, you do not want to be penalising our exporters. And you would have seen already our announcement later last month on the success that we had in EMDG funding in ensuring that our members are able to apply for full funds. And I'll ask Stuart to talk a little bit more about that at the end, because we're pretty excited about the EMDG ruling, particularly with the number of trade fairs and missions that have now been cancelled or postponed. Now you need to pay your employees $1,500. You don't have to. I had a question today about, must I bring back employees who are stood down? And the answer is no, you don't. You're not forced to pay employees. Another question that I have is, what if someone doesn't receive $1,500 per fortnight? You must pay them $1,500 per fortnight. So the challenge for every business is going to be, can I relocate someone into a job that is worth that amount? If I'm paying someone $1,200, can I make it a job worth $1,500? For the stood down employees, do I want to bring them back on, or am I simply going to pay them during their period of stand down? You do have a lot of flexibility, but here are the flexibilities that you don't have. You can't take someone you previously paid $2,000 to do a job and pay them $1,500 to do the same job. I'm sure none of you would contemplate that. You can't pay under minimum award. I'm sure none of you would contemplate that either. You must pay $1,500. So you're going to have to create a job worth that. And you are not obliged to do so. You are able to select which employees you are going to collect the JobKeeper subsidy for. So it's going to go directly to you. You are going to pay your employees. The federal government doesn't pay them directly, but it is going to arise a number of complications. I'm not quite reading the questions, but I can see the pace of them increasing already. And I think I know what you're going to ask, and I know the complications this is going to occur. So let's have a look at some of them. So first of all, let's start with eligible employees. So pretty obviously your full-time and part-time employees, including those that were stood down. You are able to include casual employees, but you need to prove some kind of regular or systemic pattern. So it doesn't matter whether you employ them only during, 10 till 2, 10 till 3, as long as you're able, and on a Thursday and a Friday, whatever you do, as long as you're able to prove a pattern. It doesn't have to have been every single Thursday and Friday. It's enough to prove a system. A number of people I know have employees that work for more than one employer. We only have one collection per employee. So we do need to be having, and I'll show you that in a moment, a conversation with employees about whether or not you are going to be collecting the JobKeeper on their behalf, because you can't collect JobKeeper twice for the one employee. One business has got to decide that they're the ones who are going to do that. So what do you do? Good question. Click immediately into the ATO and register. We'll circulate these slides afterwards, so you'll get copies of all of these, and you can click on the hyperlink I put in this slide. You do need to notify the employees that are eligible and that you've selected that you are intending to claim the JobKeeper payment. The good news is there are forms on the website, on the ATO website. So download those, adapt them for your own use. No need to reinvent the wheel here. It is a form that you give to your employees and they sign it to make sure they're not claiming twice. So you need to get a bit of move on and get this in by the end of April if you're going to start claiming from the beginning. You are able to claim anywhere along the process. So it's not 6 months or nothing. If your GST receipts end up not being one you can get into that 30% downturn category, and it happens in the next month or the next month, you can start collecting from that month. But if you want the whole period, you're going to have to get a move on and get these things in by the end of April. Now, by and large, this is a self-assessment process. I think it was sort of a gut feel early on that the ATO was going to have to approve. Unless you are outside of the box, it really is a self-assessment. But keep in mind, as is always the case with the ATO, if you end up collecting funds for which you are not entitled, the ATO is very adept at getting that cash back. Let's have a look at some of the complexities that this arises. As Stuart said, we can't do a simulation for every business because you will all be so different. But I think you are already thinking about what they might be, and so are we. So I've got an example here of an employee, in example 1, who was stood down due to lack of work. And this business has decided to make a payment to the JobKeeper. The payment will be $1,500. You do need to keep tax. And I did get a question today about, do we collect tax? Yes, you do. The amount that you are collecting will not be subject to payroll tax, but it is subject to PAYG tax. And the net amount paid to the employee is $1,308. But keep in mind in this circumstance, because you are not paying the employee a wage, they're getting a JobKeeper allowance, you will not be making a superannuation contribution for those funds. In example 2, we've got an employee who was on $1,200 a fortnight. You are going to be topping that amount up. So you must pay the employee $1,500. You can see here the same pay-as-you-go withholding tax after we take out the tax-free threshold. You can see the net amount is the same, but you can also see that there is a superannuation component required, and that makes sense, doesn't it? Because your employer payment is still $1,200, and that's still subject to the superannuation levy. So I could have done 25 examples of how this is going to play out. You are able to have a fair bit of flexibility, but it's a good time to have some thinking in-house about what does the staffing configuration look like, what does it look like for the next 2, 4 and 6 months, and how are we going to maximise the use of these funds and do right by our employees. We do know from any of the crises, none of which are going to match what's going on in our economy at the moment, but we do know from the global financial crisis that any business that was able to maintain a relationship with their employees, these companies were able to rebound much quicker and had higher rates of growth and much more improved performance over the medium to long term. So I know that each of you will be looking at even any avenue you can to make sure that you're able to continue to engage with employees. But it's a pretty interesting scheme to get your head around. The tax office has done some good work here on their website. They've got kind of a step 1, step 2, step 3, step 4, quite user-friendly, quite unusual for them, I might add. But it's worth logging in. Click on the hyperlink that I'm going to give you and see if you can walk your way through. Any systemic issues or concerns, come back and have a chat with us. We are talking to the regulators at a very senior level about the experience of our industry with these programs, and we are keen to understand how you're faring and how you're going with them. What I've done here is, because there are so many programs, what we did was imagined that we were a company based in Queensland, because I wanted to show you how some of the other activities interact with the key ones that we've just covered. So this is a Queensland-based company, has revenue of less than 50 million, less than 20 employees, under 6.5 million in taxable wages, but they did experience and are experiencing a 30% downturn. And fortunately for them, they were able to prove it pretty quickly. March 2019, March 2020, pretty obvious that the GST receipts were well down, and they were down by over 30%. So I've collected the boosting cash flow. That's the one I've explained. It picked up 100,000 as the maximum. They've got an apprentice, so there was a maximum of 21,000 there. The JobKeeper allowance, they are certainly eligible to collect. There are also, in most states, not all, but in most states, there are abilities to get some refunds on payroll tax, and Queensland is certainly offering a payroll tax refund for January and February 2020. Like most states, they're also offering a payroll tax holiday, and many states are offering payroll tax deferment. Now, I know many people on the line will say I'm under that threshold, and the threshold in Queensland is 1.2 million for annual, but it, for a larger retail outlet, they could be up at that level. So that payroll tax refund will put cash into the hands of this particular case study. So similar to the presentation that I'm giving you now, that's the big hit stuff. Those 4 programs that you can see there are the ones that are going to return real cash and are clearer ways to navigate your way through getting some stimulus that will support us through the hard times. Now, depending on individual circumstance, there are a range of other things that this particular Queensland company may be eligible for. And apologies for this huge list. But these other programs, they require our case study to have one of 2 things. One being a bit of cash saved up and plans to buy equipment. So let's say there were plans to expand, develop, buy some new piece of machinery. There are very good opportunities to do that, and now is the time to do that. Alternatively, if this business was financially distressed, that 4th column that I talked about, there are a lot of things being put in place to assist these companies. We can support the 80% of companies through the hard times, but we also need to be supporting those 10 to 15% of companies that are teetering on the edge and may or may not make it. So you might not be as aware of these as some of the other big dollar projects, but the federal government has released the rules around trading while insolvent. So while those regulations were very, very stringent, they have been loosened up to give companies an ability, longer time frame to try and trade out of an insolvent position, and a bigger buffer before any bankruptcy requirements kick into place. The Australian Tax Office is being remarkably supportive. And there are so many things that the tax office is currently offering. A good example is any infringements that were paid to the tax office after the 23rd of January this year are able to be refunded. You're going to have to pay them back, but you can enter into a payment plan and over a longer period of time, and at least it will give you some immediate cash back. But the ATO is also talking about varying pay-as-you-go company tax instalments, opting into monthly GST so that you can get refunds quicker. There are all sorts of things that they're able to do. And in this instance, your best friend is your accountant picking up the phone, talking directly to the tax office. And we've spoken to a number of chartered accountants who are having a lot of success. In fact, if you are working with business advisors and with an accountant, do speak with them, because in speaking with our family of members who do this work, they have been able to eke out some discretionary areas where the guidelines say that a line might be here. They're able to have conversations to move that line a little bit further. And that's certainly happening on things like payroll tax in the state system. Now, there are plenty of opportunities for talking with the banking sector and with the federal government and the state governments about loans. So you'd know the banking industry announced access to capital, as did the federal government and the state government. We know that you will all look at these loan opportunities carefully and with your own business advisors, because they need to be understood that an interest rate holiday of 6 months is certainly going to give you a headache at some point. And we know that our companies will be circumspect about entering into those arrangements. And there's certainly some good dialogue available to you throughout the internet, giving you advice about what the effective interest rate works out to be. So we haven't been putting out a lot of information about those, but we want to make sure that people are aware of them. Now, in addition to all of those, there are different programs that are available in each state. And we're going to be putting some more of these up on the website over the next week or so, because they are changing. So pretty much every state is offering a variation of these sorts of activities. So refunds on payroll tax, now they vary. Some are very generous, 12 months, some are not so generous, 2 months. Some of them are more about a deferral. So get it back, don't pay it at all, or pay it later. There are opportunities for selective industry grants, although I note that a lot of them are grants that are going to so-called non-essential services. So where state governments actually announce that a service or an industry or a retail outlet was non-essential, that's where they're being offered grants to support the absolute upheaval that those businesses have gone through. There are small business grants available. You know, they're in the area of say $7,500 to $10,000. We're going to get some more information about that. But what we'll do on our website is we'll do those state by state, so you're able to look at what your state is offering. We're trying to update those on an ongoing basis. I mean, frequently we'll find no state had anything 2 days ago. Now all of a sudden they're probably one of the best in class. I have to say, it looks like Queensland is leading the pack here. They've really got a full suite of programs. South Australia is being quite generous. Victoria looks good. We're expecting Tasmania to roll some more programs out, as well as they have been, given the recent complete shutdown announced for the north. So we are going to be giving more information as we go along. It is useful to think about the difference between the programs that are an as of right, things like boosting cash flow, that just happens. Put your BAS in, it just happens. And the ones that you need to apply for and go through a process. I would be focusing personally on boosting cash flow, the apprenticeship, and JobKeeper. and then sitting back and having a look at what other programs might support me. The only other one you'll need to get a move on, of course, is equipment purchases, because those purchases have got to be basically between the 12th of March and the 30th of June, and they pretty much need to be in place. So you might want to move those purchase things forward if you're in the happy position of having cash to be able to do that. But look, I think, Stuart, that's a good roundup from me, pending any specific questions that we might have.
Thanks, Lesley. That's great. Just to wrap up on a couple of things, and a couple of people asked during Lesley's presentation whether you will get access to the slides. The answer is very much yes. We will send the full slide pack out to everyone that registered for this webinar with all the links and so on. As we said at the outset, it is really difficult. There's not a one-size-fits-all approach to these assistance packages. It really does depend on what state you're in, how many people you employ, and mostly how you're affected. And different businesses are affected in different ways and to varying degrees. So what we've really tried to do is just give you a feel for the scope of assistance that's available, what's available and from where. Now, we are here for you. We've got probably about 20 minutes or so for Q&A. But also, if we don't get to your question tonight or it's too specific, then please contact the office. There may be some questions tonight that we can't answer. We'll just have to take them on notice. We'll have to do some research, but we will take them on notice and come back to you with the answers. The other thing we're going to do over the next week is put some case studies up on our website. So we're trying to get a case study for different profiles of our members. So it might be a repairer based in Melbourne with a team of 7 people, or a retailer based in Perth with 10 staff, or a parts importer and distributor with 70 staff. And a national footprint. So different profiles of different businesses. So then we can be a little bit more specific about what assistance they can offer. And we want to actually base those around real businesses. Obviously keep the business anonymous, but it's more practical if we use real businesses. So if you are prepared to assist us with a case study, just to give us some information, obviously you'll get some help out of it as well, because you'll know, or you'll have a pretty good heads up on what you're eligible for, but that'll also help other members try and match their profile to a similar business. So we will now go to the Q&A session, and it's good to see we have got some questions coming in already. So we'll go to these now and share them between Lesley and myself. It looks like a lot of them are around JobKeeper, so Lesley, you might be a bit busier than me in this session, but I'll read them out. So if we're registered for the JobKeeper payment of $1,500 and we've commenced paying this to our employees, and then the ATO says we don't meet the requirements, this places us in a cash flow hardship situation, especially when we're waiting for the funds in arrears. So that's a great question. Lesley, do you want to answer that one?
Yeah, look, I absolutely understand that. And I think a lot of questions that I've seen, I've been participating in a lot of webinars over the last 2 days, and that is the most commonly asked question, because it is a self-assessment. So I think what Stuart, one of the best things that we can do is just to provide more information on our website about, am I eligible for JobKeeper? So the clearer that we can be about your eligibility, the more you're able to do that with confidence. I also worry about it. It is a reimbursement. I don't think it's a simple answer. I don't want people to be cavalier about it, but I don't want people to be so cautious they don't apply. We'll put some more information up. Some more information actually came through today. So we'll start furnishing the website with, am I eligible for JobKeeper? And we'll do that as a priority.
I think just to add to that too, this package was only legislated last week, just before Easter, and the information's now coming out. I think the application process is around the 20th of April. It opens. So if you click on this, you will then be able to apply and start confidently paying your employees and not get in a situation where you're concerned about having to pay arrears if you subsequently find out the approval process by government and the ATO hopefully will be pretty streamlined. Another good question is, can you select employees who will be part of the JobKeeper program, or do all employees under the business who's eligible have to get the subsidy? Again, Lesley?
You can select. You are not obliged to pass the JobKeeper on. It's completely up to you.
That's right, and you do have to get the employee's consent as well, and they have to fill out a form just so that they don't double claim, or they don't get confused on which employer, because they might have a couple of employers, they might have a part-time job or so on. So that's important as well. We appear to get more money for apprentices via JobKeeper than the 50% subsidy, so that's the trainee or apprentice subsidy. Is that right? Can we opt out of the subsidy in favour of the JobKeeper? Another way to couch that question is, could you potentially double dip, Lesley?
I asked the tax office today about whether you can double dip. And I've asked a few of our consulting and accounting friends the same question. I mean, technically, I can't find any reason why you can't do both, but I just can't imagine a government allowing us to collect both. Effectively, one's designed for you to keep apprentices and the other one's designed for you to retain employees. So it looks like there will be an overlap. I think, I mean, correct me if I'm wrong, but I think it's going to be the apprentice trainee scheme that's going to return you with more cash. But the short answer to that is we're asking for a formal response about whether or not you're able to apply for both. And we'll get that out as soon as we can. But I have to say I've had two different answers and not getting a consistent line yet.
No problems. What if we keep paying employees? It's a similar one. If we have an employee who attends work for, say, 20 hours a week, are you stating that we pay the wage of 20 hours per week, and the remaining 18 hours per week are considered a top-up? Therefore, we only receive the 18 hours per week from JobKeeper.
Right. What you receive from JobKeeper, because I'm not sure what the hourly rate is there, is $1,500. So whatever your employee is doing, you will need to top up with their regular wage.
Yeah, so essentially, if they're paid under $1,500, you have to top their wage up, and that might be through superannuation payments or a top-up wage. And even if it's 20 hours a week, you still have to claim the full $1,500 per employee. You can elect not to as well. Can we ask an employee to use their annual leave instead of standing them down? This is a question for Emma at ILG, but I'm pretty sure the answer is, and it'd be worth a call, but I'm pretty sure the answer is you can do either or, but you have to give the employee sufficient notice. You have to have a conversation with them, and they have to agree to use their leave or draw down on their leave. And that could be annual leave, it could be long service leave, and so on. But it's got to be a mutually agreeable situation with the employee.
Yes, yes. I've also,
if they don't agree, then you can stand them down.
I've also got a question about, is it just for stood down employees? It's not, guys. It's not. You don't have to have stood down an employee to qualify for JobKeeper.
I have an employee chooses not to work. I'm assuming because he doesn't want to take the risk from contracting COVID. Am I required to pay his full wage or only the JobKeeper amount? I'll have a go at this one. I'd say essentially that's a stand down situation. So you would only be required to pay the JobKeeper amount, essentially, because it's a situation if he's chosen not to work for his own reasons, and that's fine. Then that is a stand down situation. He's not gainfully employed in your business, so you would pay the JobKeeper amount, not full wage. A couple more questions about double dipping on that. how does JobKeeper work when you pay your employees weekly?
Sorry, Stuart, when you get them paid weekly?
Because we're talking about $1,500 a fortnight. So if you pay your employees weekly.
Yep, that's fine. That's fine. The $1,500 per fortnight is the calculation that goes to the business, and it gets paid monthly. It doesn't matter on what terms you pay your staff.
No problems at all. Thank you. If superannuation is applicable for the JobKeeper value of $1,500, do we need to change our payroll category to reflect this? Also, do we pay people as normal, or do we need to start a JobKeeper payroll category? This is getting a little bit technical, I think, for us. We're not.
I did hear a webinar today, Stuart, which was saying that it's certainly going to have an effect on our payroll system. So just to be clear, that superannuation does not apply to JobKeeper. And I understand that for many people's software systems, this is going to be a bit of a hitch, because you're automatically accruing benefits and having superannuation on any salary that you pay a staff member. None of those things apply to a JobKeeper allowance. So yeah, you're going to have to be looking at how your automated systems work.
No problems. What happens if thanks, Lesley. What happens if I'm paying superannuation salary sacrifice? Does this cease at this stage?
Right. So if you are earning a salary in excess of $1,500, what's happening is that your employer is receiving $1,500 as a subsidy for your employment. So your paycheck and all of your arrangements in your paycheck remain the same. The difference is that your employer is receiving some funding to support your continued employment. It is quite different for those employees who are over $1,500. It's quite different. It's a different treatment than if you were stood down and that $1,500 is your only allowance.
Thank you. If we have reduced work, can we cut employees' hours and days down and reduce their wage closer to the $1,500 a fortnight?
Not if they're doing the same job. If you're reducing hours, yes, but let's just make sure that we're not, taking a $2,000 job and paying $1,500 for it. I mean, pretty much normal, fair justice and common sense. If you're able to adapt the work and that suits the employee, then yes, you are permitted to do that. But yeah, let's make sure that no one is doing a job for less pay.
Yeah, and just to add to that, I'd probably suggest contacting ILG and just getting some advice on the steps you should be taking before you do that. I think most employees are pretty reasonable about things at the moment, and are prepared to be flexible. We are in unprecedented times and so on, but there are some steps that you have to take before you start cutting people's hours and changing the salary amounts that you make. And ILG will walk you through that process. Why is it only under 20 employees that can get the apprentice payment? We have 26 employees and 4 apprentices. Look, I might tackle that one. It was a program designed for small businesses, and it was something that was done pretty quickly, and there are a lot of apprentices and trainees in businesses under 20 employees. But you can still claim the JobKeeper payments for those for all your employees, including your apprentices. So that should compensate in some way, although we're still trying to get confirmation on whether you can double dip. Therefore, you wouldn't be able to claim for those apprentices twice. Can we move to a 3-day working week and keep the JobKeeper with the majority of the wage? The business picking up only the additional hours worked. Again, that's probably similar to the question previously. I would just get some advice from ILG before you do that, but it really is, from my understanding, subject to appropriate consultation and agreement with your staff and notice periods. You just can't start arbitrarily changing people's working hours and salaries. What notice period do you need to give employees before standing them down? We really are getting into the workplace relations and employee law area, which is Emma's domain. So we might pass on that one, but we'll take that question on notice and include it in the FAQs. Emma will be happy to provide that. Going back to the apprentice subsidy and the JobKeeper, we have an apprentice who's on the cusp of becoming a tradesperson. Therefore, we've applied for the subsidy from the 1st of the 1st, 2020 to the 30th of the 3rd. Then we registered for JobKeeper to keep him from the 31st of the 3rd. Do you think this meets the requirements? I think you're being very sensible there.
It sounds like it.
Yeah. As a joint director of a proprietary limited company and not taking a wage as such, but paid annual dividends, can we qualify for the JobKeeper payment? Again, Lesley.
Right, there are some arrangements in place for sole traders and directors' fees for JobKeeper. We might have a look at those offline because they are a little bit more complicated. So actually, I might just pop them in the FAQs, Stuart. We'll get those going very quickly. But suffice to say, there are some arrangements that are being made for different business structures and for different remuneration.
Yeah. I've purchased my business May last year. How can I show a downturn? Because I can't compare. I think, Lesley, you covered off on that in...
Yeah, I'll put some alternate methods of calculating in the FAQs. It is possible. Don't despair. If you took over your business in May, I'm quite confident that you've got enough trading history to meet the requirements.
Do you still accrue holiday and sick leave pay while being paid JobKeeper?
Our advice is that you do not. Again, we'll pop that in the FAQs, similar to superannuation, because it's not an employer payment, it's a government allowance.
Although if you're still employing the employees,
that's right.
They would still, it essentially becomes a wage subsidy.
Yes, yes.
But if you,
so we'll put that in the FAQs to make sure we make that distinction, Stuart, because I don't want people to assume that that proportion of someone's normal salary is removed from benefits, including superannuation, because it's not.
No problems, thank you. We're nearly out of time, so we might just take one more question. So at this stage, we intend to continue paying all employees either their entire weekly wage or part thereof based on reduced hours. Assuming we are an eligible employer, are we entitled to the $1,500 per fortnight for all employees in that scenario?
Yes.
Yes, no problem. All right, so we might wrap things up there. There's still probably another 15 or so questions. So we'll go through those and release an FAQ in the next couple of days. And if we haven't got the answers, we'll get them from Emma at ILG or others and get those out to you. So just in closing, I did again want to thank you all for coming online tonight. I hope the content has been useful for you. Keep in contact with us. Our team are working. We're working remotely, but we're online. There's mobile numbers, info at AAAA or advocacy at AAAA if you've got specific queries around government assistance, or give us a call on any of our mobiles. As I said, we're all working, and our entire focus at the moment is on helping members through this situation that we face ourselves at the moment. In addition, ILG are ready and waiting to take your calls. Those calls are free of charge, and we get great feedback from people that contact ILG, and there's literally hundreds a month calling them at the moment. So again, the number there is 1300 369 703. And as Lesley mentioned, if you are keen to volunteer to be in one of our case studies, please either contact myself or Lesley, and we'll get some details to you. It won't take long, but we'll just need to get some business information from you, and then we'll work through that with you. So again, in closing tonight, thank you so much for being online. Thank you for your support of the AAAA. We are here for you. It's a difficult time for us all. There are a lot of resources on our website, as I said, from some of these employee relations things, to government assistance, even mental health things. We need to be aware with employees, with colleagues, and with friends. This is a difficult time, and people are struggling to cope with things. So keep checking in on people. Keep people's spirits up, try and maintain a sense of humour, and use the support resources where they're available, and there are plenty of them available. We will keep doing different webinars. We'll keep you updated, and our commitment to you is as things evolve, and it is a fast evolving situation, we'll get information out as soon as we can. But as I said, in the absence of anything else, pick up the phone or give us an email, and I think you'll find our team will come back to you very, very quickly. So thank you again for being online tonight. Stay safe, stick together. We will get through this, and thank you very much. Good night.